Yo guys, what's going on? Happy Wednesday morning. So today I wanted to talk about one of my biggest core positions. It's my second biggest position behind Tesla. If you haven't watched my previous videos, I'm a long-term investor. This is one of the stocks I've been buying for over a year at this point for sure. So stock I'm talking about today is Corsair Gaming, ticker is CRSR. This has been given, some people, in private messaging me or even in some of the comments, you see some people being like, oh, you're an idiot for staying in the market, or oh, you're losing all your money, or, really basically anything to put you down. Usually those people that do that either miss an opportunity or want the market to go down because they're shorting it, or they're doing something along the lines, maybe they're just not happy with themselves. So what they do is they just talk shit on other people and, make themselves feel better for some reason. It's kind of weird, but that's fine. They can keep doing that because in the long run, I know I'm right. So it's just funny when you read comments like that, like people are so negative, and then when things turn around or you circle back when things are successful, they just stop. They just won't answer. It's really funny. So anyways, I think the tides are turning. It's I'll be the first one to say it. There's probably a 75% chance, maybe 80% chance we hit the bottom of this nasty downward spiral. If you look at, like the S&P, the NASDAQ, they went down a lot, like in late January. And since they really haven't like found a bottom, and there was so much negative catalysts out there, in January, it was like 4 or 5 really fear-mongering things, and the news is freaking everyone out. There's not any good news anywhere, and people are panicking, and it's just crazy. When there's max fear, really, that's when you should be buying. The market was super fearful. I did actually sell my Apple and Berkshire. I talked about that in just about every video, but that's fine. They were double-digit percentage gains, basically long term. Reason I sold was not because I was scared, but I made a ton of money. Apple had crazy earnings, so I'm like, you know what? Their expectations will be so high this year. There's so many small caps out there where the risk reward is so tempting. So I actually took that money to gather more cash to reinvest in the small caps to make more of a return in the future. So that was my approach on that. I mean, I don't regret doing that at all. Even if Apple runs up or Berkshire runs up, 10, 20%, that's fine. I made double digits. I realized the gains, and I feel like I won in that case. So there's really no regrets with that. But anyways, Corsair Gaming, it was up 13.85% yesterday. A lot, news broke after hours, so the stock just shot up. It was moving with the market most of the day. Obviously, the Dow, S&P, NASDAQ, and Russell 2000 were all green. So the big news was basically Corsair joined the S&P 500 small cap 600 stocks. This is really big, and this gives it a lot of excitement in the stock. If I was a short in this case, it is basically almost max short. I think the short float's over 30%. I don't know the exact percentage, but anything over really like 10% is high. So we're at 30% short. If I was a short in Corsair Gaming right now with this news and basically seeing Roadblock's earnings, they completely, that's in the gaming industry, they completely killed it. I'd be very scared if I was a short. And being the fact the short float's over 30%, this stock could run so fast if it starts getting squeezed, like ridiculous. So it's a matter of when. I don't know when that's going to happen, but when it does happen, it's going to be really sweet. So it's going to be real funny to circle back and see some of the comments like last week or the week prior being like, oh yeah, you left the market, or oh, you're an idiot for buying Corsair, or all your positions are down. Like, okay, they're down. Cool. I mean, they have great fundamentals for the long term. I don't really care because I'm not selling them if they're down. So that's kind of mindset you need if you play the market. You shouldn't be like, my market money is money I don't need. Like in being quite honest, like I'm not doing this to live off it. I'm not doing this. I'm not betting my mortgage payment on this. Like, this is just extra money I have that I can compound interest long-term on good fundamental companies. So like, it's funny when people say that because they don't even know your financial situation. And like in my financial situation, the market is all, I don't want to call it play money, but like, I don't need it. If I lost all my market money tomorrow, I'd be fine. So whatever, that's a whole other topic. Something also that happened yesterday was the Ukraine-Russia fears. The tension is basically easing. Russia, it's funny. If you look at the U.S., all the things were, oh, we're going, if Russia attacks Ukraine, like I remember Biden was speaking a couple weeks ago, and in his press conference live, he's like, oh, it'd be embarrassing if Russia doesn't attack Ukraine. Like, dude, like, why are you tempting? Why are you poking the bear? Like, you shouldn't be encouraging war, basically. But anyways, that's a whole nother story. So he was poking the bear, tempting him to do it. So I'm like, oh God, here we go. And then the news networks are freaking out. They dropped the ball Friday saying that we're definitely, if they react, it's going to be within the next 7 days. And here we are saying, basically Russia just said, oh yeah, we're just doing a normal test, just practicing things. And basically they're pulling troops out slowly. And that's what started the market rally yesterday, in my opinion. Just the ease of that. Oil prices dropped, which obviously, if they thought we were going to war, they were saying, oh, oil, crude might go up to 110, 120 a barrel, like all this crazy nonsense. I think oil's around $90 a barrel right now. So it went down significantly. I think it was like 95, 97 before the weekend. It's just real funny. So like, that's why, I don't day trade, I don't swing trade, I don't get emotional on certain news, like short-term stuff. It's not a big deal. It really isn't. If you have cash on the sideline, which I do, if it does happen, okay, buy your favorite stocks and average cost down. If it doesn't happen, okay, then the market's doing what it did yesterday and just going to the moon. Like, could this rally happen all week? Maybe, maybe not. My guess is people are going to take profits in the morning, definitely tomorrow, because the market ran like crazy. So a lot of day traders, swing traders and stuff like that, they're going to take their profits tomorrow morning. But the question is, after that, at like 11 a.m. and on, like how is the market going to react, which will be interesting. So the Dow yesterday finished at 1.22% up, S&P finished 1.5% up, NASDAQ 1.25, and then the Russell 2000 2.75. So interesting thing, if you look at this, if you look at these percentages, the most risk on assets, they had the biggest gain yesterday. I think you're going to continue to see this. If the markets are green, you're going to see that the risk on assets, people are going to start rotating their money into it. All the people that tackle lost harvest in December, because they made so much money last year. I think it was the biggest ever in recent times, in my opinion, because so many people made money. They want to realize those gains. So it's just sitting on the sideline right now. Really, real estate's not the best play. They're not going to leave it in cash because of inflation. So like they're going to put it back in the market. It's just a matter of time. They just need to find the bottom, and then when the FOMO hits, you're going to see this huge surge of money come in. That's just my opinion. So it's a good sign when you see this kind of progression in percentage-wise. It just means basically we're probably near a bottom because people are doing risk-on assets now. Let me see where I'm at here. Why is this not working? Yeah, so yeah, we're basically getting to like risk-on assets, which is great. I never sold my small caps. I never sold any of my basically fintech stocks either. They got destroyed the past like six, 7 weeks. It's not a big deal. I've been averaging costs down. I'm very happy with where they're at. I'm very happy with the overall positions. If bad news hits and we go into a recession or something like that, I have cash on the sidelines, time's on my side. I'm in no rush to get out of these good companies. So if it goes down 5, if the S&P pulls back 5, 10, 15, 20, 30% from where we're at now, that's fine. I will gladly buy more. I'm not going to panic sell. I have no margin. I won't get margin. Like, I'm fine. I'm cool with waiting. I have no call options, no puts, no nothing. So just being long-term investing, that's the best way to do it in my opinion. So some huge catalyst coming up, really the Ukraine tension thing, I think we're good here. I think they're pulling back. This is more of like a plus right now. So there were 4 catalysts between now and March 16th. This was one of them. So I think we're good on this one. So 1 of 4, we're good. The unemployment numbers, the first Friday of March, this is going to be big. If obviously unemployment goes up, it's better chance we see recession. So, or it's an indicator of a recession. So if we're sub, 4.1%, which I think we're right around 4% right now, or 3.9. So if we're sub 4.1, this is going to be a plus. So that's good. That catalyst is not right now a problem. The March CPI data, I think it comes out the same day or the second Wednesday of March, sometime, around there. If CPI, last month was 7.5%, which was the highest in a very long time. If this comes in anything less than 7.5, let's just say even like 7.4, that's an inflection point down. So the market's going to love that. Even if it comes, like the bar is set so high right now, I think it's going to come down. Like that's my opinion. So if it does, that's another plus. If it comes in at like a 6 or a 6.5, like
That's a double plus, we'll call it. So that's good, very realistic, right? And then the Fed meeting, the majority of the market right now has priced in a 0.5% rate hike, right? Everyone's freaking about the rates. The rates really aren't a big deal in my opinion. A half a point is not gonna do anything in the grand scheme of things. That's like nothing. Like people are still gonna buy what they wanna buy, people are still gonna loan what they wanna loan. Like half a point is nothing. So even if it does come in at half a point, right, which the market's already priced in, I would consider that like basically a plus. Now, if it comes back to a 0.5%, a quarter of a point, that's a double plus. So really, you know, the way I look at this whole situation, I think it's good. Looking at all this is all very realistic to happen. And if it all does happen, we definitely hit a bottom. Like there's no way around it, and we'll take it month by month and make sure unemployment stays low and make sure inflation stays under control and get supply chain issues back. It's good. Now, if all three of these are bad or one good and two bad, market might stay where it's at, go down a little. Like we don't know. But anyways, if you have cash, you're a long-term investor, you're going to win in the long term. So that's basically all I got. I mean, I put Corsair Gaming as the title, but this is all like stuff going on right now that we have to keep in mind. Just keep an eye out too. So if you guys like this video, make sure you like, subscribe, comment below. Till tomorrow, peace.